Everything's going well. Just going to do a higher time frame breakdown and basically show you lot my new strategy because I haven't done a strategy video in a while. I'm going to start on a fresh chart. I've already been charting up on GU. This morning I went crazy. This is the 4-hour time frame. I mean, if you see that, just trading back up to this trend line after the injection. Strategy playing out after the third tap. Highlight candles 52 pips, and that happened in a day. See that on that hourly? And we're retracing now in this fair value gap where we're going to break through this trend line. And then if we do break through this trend line, then we know we can go for the next high. Next high, 4-hour injection, where banks are selling from. And also on a round number. But yeah, let's get right into the video. So no matter what, when I'm gonna take everything off. We'll do it on UJ. We'll start this again. Remove drawings. So I'll start from the monthly time frame, and I draw all my psychological levels. So that's levels that can be support or resistance, swing highs, swing lows, highs and lows of the market, swing points. You get what I mean. So there, because price swings low. Swing point, also where price comes and swings high above this liquidity and it starts dropping. I think this is on the monthly time frame as well. We got that down here as well. What happens? Have this swing low. Price comes and taps in when price swings below this low, and then price trades into this bullish order block. What happens? Boom. How many pips is that on the monthly time frame? $5,000 pips on UJ. Crazy. Got a high. Yeah, it's really, UJ's been on a huge upwards trend, as you can see. That's where price started. But we haven't 1, 2. Yeah, I've not done another tap on that yet. After we've drawn out those psychological levels, we come down and then we try and find the trend lines. So now we can see we're in a clear uptrend. You see when these psychological levels get tapped and then they react. Tap below. React. 1,000 pips. Back up to what? A bearish trend line. A bearish fair value gap, I mean. 1,000 pip range. When you trade and you've got the psychological levels and you trade in between this range, there's pips everywhere. Price taps in, sweeping low, breaks high, retests the fair value gap down here. You can see that there. Price taps into that fair value after we bounce off the psychological level. Boom, that upward trend starts. And look at that, you can long that tap into the trend line. Just going above those highs. And there'll be people, central banks literally buying all of this up and they're hitting these trades. They don't even need a stop loss here. Look at that. That's insane. 5,000 pips with no stop loss needed. And that's our time frame working on the higher time frames. Our strategy working on the higher time frames, my bad. Clean. So to use this strategy, you use inner trend lines, outer trend lines, sweeps of liquidity, fair value gaps, so imbalances, higher time frame, proper market structure, and we bring all of our confluences together to find a A+ high probability setup. So as we see, we're only looking for buys here. We're in an extremely bullish market. We've got our outer trend line. Price is only tapped onto it. We started it, tapped into it once, tapped onto it twice. But mark that closer. See those two taps. We could be expecting price to come back down to this trend line, because when we look at the trend line taps, it's always the third tap what goes crazy, where that liquidity lies. For price to really start trending in the way we want again, psychological level. Come on to the 4 hour, we mark out our resistance and our support, so we can trade price in like a certain price range, so about 1,000 pips. Where's the market close to? There, our lowest low. And that from this level is how many pips? 700. So even though it doesn't look like much, that's a lot of pips. You need to simplify your trades. Don't look at all of this, because what we're trading is up here. You can see we're already on the top of this range. If price breaks this to the upside, then we only expect price to go higher. We can draw in a trend line. One, two, three. So we can see a tap onto this or a break below. Also more confirmation of sellers in the market to see that trade go down to this trend line. And we just keep working our way down. Keep working our way down the time frames. And then look, we start getting into more of a range where we can trade. Price is either going to break this, keep rallying, or we're going to see the break to the downside. Another inner trend line. One, two, three. See price get validated, and then we draw our fair value gap. So if price breaks low, it will leave a fair value gap, and then we draw it, see the retest, go short. On GU I can show you everything, what I'm saying, working out. So see I've drawn this on the 4 hour. I've got this big imbalance down here that I'm just simple price action. We also like price action in our strategies. But 1, 2, wait for the third tap, and then we can see bullish. And then also if price breaks its trend line, but if we can see also 1, 2, 3, where we can be looking for sells. So if price breaks the upside, we're buying. If price comes down and breaks to the downside, we're selling. In the range, huge, and then we're catching those big pick moves because we can just target all of it. Look at the size of these pips. This is what's getting caught, because we only trade higher time frame trends. You see how I'm finding these trends really easily from, what's that as well? A psychological level gets swung. Where there's been resistance in the market. Swing low, break through, break below its last low, changing the high time frame trend bearish. You see what I'm doing by really looking at the high time frame bias, marking it all out, making sure I know where that higher time frame's going and following it, so I can be waiting a couple of days. But it doesn't matter how long I'm going to be waiting, I'm going to be finding those high probability setups. Wick, drop, wick, drop. Look at that right there. Wick, you see the rejection, close below to engulf the candle. You can see that one monthly candle where that strategy is working out. Dip above psychological level. Also in a trend line. See there, price taps it, wicks out, but we don't get a significant close above. So this trend line is still valid. Now look, we'll also have a sweep of liquidity there with the last high. Not a big stop loss needed at all. Nearly 600 pips right there. Can trade back down to imbalances. This is like I'm not really going super deep into my strategy right here. This is a lot of basic market structure. Could also draw this trend line from swing point, but it just lines up better here. 1, 2, 3. Get a closer insight on the market. But yeah, man, this is just basically a rundown of how I chart my charts, how I run down from the higher time frame and use my higher time frame to my advantage to find high probability trades, waiting patiently, could be waiting a few days, a few hours. But when that trade comes, when I see that third tap on my trend lines, when I see the sweep lows, when I see the high time frame imbalances, the order blocks, the swing points, using all of these things as confluences towards a high probability setup. As long as you've got good risk management, good discipline with your trades, you're not over trading, you're not revenge trading, you're not listening to your strategy, you make sure you listen to it every time, and you're narrowing the market down into 500, 1,000 pips, and just looking at that next 500 to 1,000 pips, where's that going? You're definitely going to catch so many more pips, man. Trust me. Implement these things. Go over this video a few times on what I'm explaining. If you want me to explain a bit slower or go more into depth into some things, drop a comment, drop a like, drop a sub, and let me know, man. Hope you've enjoyed the video. There's more to come. See you in the next one.